presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Serve the one you love. Once you decide to be a couple, you're there to serve the one you love, to serve your love to your lover. And every kiss and every touch, you feel you're there to please the one you love without expecting anything back. Market-wise, let's take a look at it out here. We have the Dow Industrials up 125, NASDAQ up 75, S&P's up 22, gold contract down $6, trading at $12.88 an ounce. Silver, flat, $17.07. Platinum, off 14.5 bucks at $9.70 an ounce. Copper, off a penny at $2.90 a pound. Light sweet crude down $1.25, trading $47.53 a barrel. Notes, 10-year note, down 9 ticks, 126.16. 30-year bond off 13 ticks, 155.02. King dollar up 354 ticks, trading 93.310. The euro's at 117, almost 118 to the U.S. dollar. The yen is trading at 109.5 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We go up and we take a look at the SPY. What you have is that you're up today on 42 million shares. You have hit a high out here intraday at $246.79. Your benchmark out here, folks, is the downdraft from Thursday, where we started out from 246.44. You get down to 243.70. We have volume of 120 million. Bottom line, we'll see whether it can hold the 246.44. Right now, you're underneath that. So you close underneath that. That's a failure in price and volume. And that would send it right back down the other side, which is typical of summer trading number one, but of how bounces come in. Right now, you've done 405 million in the NYSE. NDX 100, what do we have with the NDX? The NDX is going to be harder to fail on price and volume. On volume, it's easy. On price, it's going to be intriguing watching this shake out. You're only 34, well, the NDX hit a high today of 144.01. You're at 143.76. That would have to close under 143.40. And if I go over and take a look at the NQ futures right now, we've been going sideways all day. The first get-go, any movement at all was at 10 minutes of 2. 10 minutes of 2, you crept down slightly. When I say slightly, I mean exactly that. 7 points in the NQs and nothing. I mean, so we'll see whether they want to crack and get down to the 58.92 area, which they could. Small caps, different ball game. Small caps also look like they're going to fail in price and volume. Small caps are up $1.90 right now. A close under 138.28, which is 11 cents lower than we are, would be a failure in price and volume. Gold contract. What do we have with gold? Gold contract out here goes sideways today. We're down $6. That's a sideways move, however. Big volume. You get a volume of 227,000 contracts. Gold now is in a confirmed ABC structure on the way up, folks. It had taken its B point out on the 9th, which was last Wednesday, took it out with volume. You get a price projection up here of 1327. Now, I do expect what you're going to see here is that we're going to build some more cars, meaning go sideways. And the reason is twofold. The biggest reason is that the U.S. dollar wants to bounce. The second part of that, however, goes like this. If we take a look at the gold contract, what you're going to see, the gold contract has been trying to make it through the downdraft from November, since November. And that downdraft was vicious. We went from 13.38 to 12.18. We got back up in April to 12.94, couldn't handle it. You got back up in June, 12.95, couldn't handle it. Now that you get a confirmed ABC structure on the way up, I expect you're not only going to take that out, you're going to take that out, you're going to blow that away, and we're going to get up to the 13.77 level. That's how it seems to be straightening it out. Notes, the 10-year note. What do we have with the 10-year note? 10-year note also is saying it wants higher price. This is back down today. You get 848,000 contracts. That is going into 1.4 million. It's already rejected the lower price of that. The high that it's going after is 127.08. I expect, number one, you're going to get to 127.08. We'll see whether that's going to blow it away. The 30-year, same type of setup as the 10-year, meaning it's building more cars to get up into its high, and we'll see whether it's going to take it out. The 30-year right now is trading at a price point of 155.02. We've done 167,000 contracts today. That's anemic. We went up on 274. The June swing high that we're going after is 157.08. And if we get over and we take a look at good old King Dollar, what you're going to have with King Dollar today is up 354 ticks. You get 13,000 contracts traded, and it looks like King Dollar is setting up a B to a C of a very large ABC structure on the way down. What you have is this. King Dollar, a week ago Friday, finally does a dead cat bounce. We get from 92,580 to 93,640. You go slightly higher, volume dies. Friday, we come down, volume expands. We're going up on light volume. I do expect it's going to do a bigger bounce than this. But if we bounce, as we're bouncing right now, bottom line, your probability is much higher that you get a large ABC structure down that will take that baby into the 88 area. Our phone number is 877-927-6648. Let's go over to the Dow Industrials and take a look at the strength inside the Dow out here. It's all about Goldman Sachs today. That's putting 26 positive points. Apple's putting 15. Boeing's putting 14. Visa's putting 12. Taken away from it, Home Depot's putting 8 negative. Chevron's putting 4 negative. That's about it in that whole context. Oil market, what gets intriguing here with the oil market, what we just had here, is that this thing just continued down all day long. And you're going back into, so let's take a look at this. We're at right now 47.50. This thing wants to run into 46.38. You're into the bar from the 28th. There's no reason it can't get to the bottom of that bar. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials right now up 130. Nasdaq's up 77. S&Ps are up 23. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 131. You get the Nasdaq up 78. S&Ps are up 23. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Don't forget, folks, Steve has a great program right here. Every trading day, 1 to 2 Eastern Standard Time. Now, remember, you can get all the programming at TFNN right on your cell phone. You go to TFNN.com. You hit Tiger TV. You're going to get some great HD quality video. Steve also has a great newsletter, Mastering Probability. You can test drive that 30 days, absolutely free. The way you do it, come to TFNN, go to newsletters, go to trading newsletters, you can test drive Mastering Probability 30 days, absolutely free. Steve Rhodes, what's going on?
Well, you know, today would be a good day, or tomorrow's a good day for folks to come over and test drive Mastering Probability. We're now flat inside the newsletter. We had taken long positions inside of the NASDAQ 100 right after the July 4th holiday. We closed that out a couple of days. We actually took profits on that trade twice. On July 11th, we went long the mining equities via the GDX, as well as gold via GLD. We went ahead and closed out the gold position today. We took a 4.2 to 1 risk reward. When we went ahead and we took these trades, we were 100% invested into the market, about 4.7% return in the about 5-6 weeks that those trades were open. So we're looking for new trades, and now's a great time to come over and test drive Mastering Probability. I wanted to second start off with taking a look at this slide here is the S&P 500.
Okay.
And if we don't think that politics impacts the stock market here, these show the geopolitical events during the last 3 years. And so all the way on the left-hand side of the chart, taking a look at the Malaysia airliner that was shot down over the Ukraine, Ebola, the mini crash in China, what I call the oil crush when it went from 61 to 26, Brexit, the U.S. election, each of these showing different bottoms. Most recently here with the U.S. Sending some Tomahawk missiles into Afghanistan, the Russian impeachment, Mueller coming on board, and then most recently North Korea. And if we take a look at the fire and fury rhetoric from last week on Thursday, which went ahead and sent the market lower into the early Friday morning level, one of the patterns that we utilize to go ahead and take long or short positions inside the newsletter service is when price is moving lower, doing it with less relative energy. And so I've automated that tool so that on my screen I can go take a look at any chart, see when that pattern is present. And in this case here, our signal to go ahead and step into a long position would be when we get the nice bullish reversal signal, which in this case here was the hammer candle. Now, that's a 30-minute chart that we're looking at, but it works beautiful, and being able to help identify the short-term bottom, at least, is what I'm referring to it as right now, as the North Korea bottom. If, again, looking at these events over the last 3 years, if I just step back and take a look at the so-called Russia impeachment, this is where we went long inside the newsletter, the Index 100, because it was a beautiful Gartley buy pattern inside of the NQ daily futures contract. And again, an A to B equals CD coming back to some prior swing points. And here we had that nice little bull sash.
What was the Russian impeachment?
Well, what I call the Russia discussion and Trump and impeachment, and that's what I really mean by that. Yeah. So just the Russia.
I get it.
Yeah. So again, just a geopolitical discussion rhetoric, in essence, that's out there that's assisting driving these markets, and so. A nice little Gartley buy pattern that presented itself. If we go take a look at the U.S. election, as it was making a nice A to B equals CD to the downside, we had a nice little gap to the upside. We had this little inverted hammer right at the 1-to-1 level. Markets obviously moved higher from there. If we take a look at the Brexit bottom, this here had really three different patterns. I'm not showing the A to B equals CD pattern. You can visually see that on the screen. We can see where price was moving lower, doing less relative energy. We can see the nice little bull sash candle. And then we have that seventh wave move. That's letter G as part of the Chapman wave out there. So the geopolitical chess game is going to continue, and it's really important for all of us to understand the different patterns that help us identify either tops or bottoms in the market. So if I step back to North Korea just for a moment, because to my knowledge, the issue hasn't been resolved. I haven't seen anything where it says that has been resolved. So that is one of the reasons why I'm referring to Friday's bounce, where we saw that bottom, is really just being a bounce at this stage. Now, there was another element that is really cool with regard to what was going on inside the spot volatility index on Friday. This snapshot here, Tom, was taken at about 7:30 in the morning. And what I want you and viewers to take a look at is the top line out here shows the spot VIX index. And this was in the pre-market hours out there. And on the very right-hand side, so the spot VIX index was traded at 1653 at the time. All of the other futures contracts were priced below that. Now, in the last 5 years, this is a very rare event. We've only seen this occur 11 times. And each time that occurs, there is a bounce or bottom that forms. So it is a really cool dislocation, especially for those people that like to trade the volatility index or whatever it is you're trading. There was, over the 20-day period, a 73% rate of change during that time period. So it's a beautiful dislocation that went along with that short-term bottom pattern that we took a look at inside of the market. So here's the thing: if the North Korea event is not over, then if it is over, then Friday was the bottom of this next bull market, of the bull market that we're in, and will continue to resume. But if it is not over, then we won't really see a bottom until a feeling of optimism occurs. And let me show you what I mean. If we go back to the last Korean War, back into June of 1950, when the North Korean army went ahead and crossed the border, we can see this is the Dow. We can see how the market precipitously moved down until there was this optimistic event. It wasn't the end of the war, where Task Force Smith, they stalled the North Korean army. And that was on July 8th. So we can identify that bottom. And it was just that optimism that something bad, something nasty is going to come to an end. Pearl Harbor. Here's an example of Pearl Harbor. The market had already been moving down. Pearl Harbor, December 7th, 1941, precipitated a move to the downside. And it was the Battle of the Coral Sea. That was on May 7th, 1942. That was not the end of World War II, but it was that feeling of positive resolution or optimism that went ahead and the market just continued to move higher from that point forward. If we take a look at an example of a bad event, Eisenhower has a heart attack, September 24th, 1955. That was a short-term top, and the market was kept up to date. The U.S. citizens, we were kept up to date on that. I wasn't alive back then, but it was just simply the reassurance that all was well that started the bull market run again. So it is this feeling of optimism. We could take a look at the Persian Gulf War as another example out there. So here's the deal now. Until the current North Korea situation gets resolved, this could be a very, very, very bumpy market. But let's just say things go badly. What we want to look for is that feeling of optimism, because that's going to be the next really nice, viable bottom.
And folks, you can come over to our website at TFNN, go to newsletters, go to trading newsletters. You can test drive Mastering Probability 30 days right here, right now. Thanks, Steve. Look forward to the show tomorrow.
Take care.
Stay right there, folks. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now up 144. You get the Nasdaq up 83. S&Ps are up 25. We go take a look inside the NDX 100. Strength out here. The strength of the chips, folks. You get NVIDIA up 7%. $11 at 167.02. You get Micron Tech up 4. at 29.11. Let's go over to NVIDIA again for a second. I got to see this thing. See if we had all-time highs here. Not all-time highs, but so the all-time highs on NVIDIA is 174.54. Now, this consolidation is in place. It's kind of interesting. When we go back to the 9th of June, that's when NVIDIA went from 168 to 142 and took the rest of the market with it. That being said, it didn't take long for it to get to another high of 174. It comes downtown Friday, and yeah, it's coming back with half the volume. But that's saying that, guess what? That wants to test that high of that, looks like that 174 to 174. Lamb Research, looks like Lamb's taken NDX. Lamb Research, that's up 2.9%. Taken away from it on the way down, you got Mylan Pharmaceutical down 3.8%. JD.com's off 3.5%. You get C-Trip down 2%. If we go over to Mylan Pharmaceutical and take a look at that, this has been in tough shape since that whole EpiPen, the whole ball of wax. So this is a monster ABC down. Look at this. Holy cow. Okay, so your A point is 50. Your B's 33. Talking 17. You're talking 28. Oh, it's almost hit it. 28 would have been the ABC structure on the way down. And right now, it's hit 29.61. This actually looks like it's going to run into somewhere about the 23 area. So that no doubt is a big number. Let's go to Tim in Denver, Colorado. Hey, Tim, what's going on?
Tommy.
How you doing, man?
Good. How are you doing?
Good, thanks. Good.
Good talking to you.
You too, man. So, what are we going to look at?
What are you thinking an entry for Nugget?
Let's take a look. NUGT. So
one of the favorites.
Yeah, no, listen, I like them both. There's no doubt. Nugget, folks, is the direction 300% bull position of the New York Arca Index. So these are daily investment vehicles. We get over and we take a look at the Gold Bugs Index first. Well, actually, let's just do the GDX. We'll go off the GDX. Okay, so you take a look at the GDX. GDX out here, it's down 26 cents today, dramatically lighter volume. I expect this GDX, Tim, is going to try to test the 2243 at least, which was the high of the lows last week. And I wouldn't touch that nugget until, yeah, if we put nugget up, what you're going to see. So nugget's at 32.13. That'll probably come down somewhere into the 30.35, 29.89, somewhere in there. That's how I trade that baby.
You think it'll get that low? At 28, you thinking?
28.95. Yeah, I do. I do. What you have is this. So picture this, folks. The longer-term aspect is really set up nice, actually. You know, you get the gold contract and an ABC structure on the way up. You have the XAU, the HUI. We're pushing in with volume. But this dollar wants to bounce, man. You know, so it's
that's that's the South dollar, the dollar thing. Yeah.
That's what it looks like, and you know, I suspect that that's what's going to make the difference. Now, you know, you just bring so. If you come over to our webpage at TFNN, folks, what you're going to see, this is actually blowing my mind, but this is a fact. If you see on the front, what you're going to see, we just put this up. I did the 799th edition of the Gold Report today. So the 800th edition is next week, and we're doing a special. So you can get 60 editions of the Gold Report for $600, $10 a week. That's about a 50% off deal, folks. What I can't believe is that it's the 800th edition, man.
You're the king of gold, Tommy. You're the king of gold.
You know what's so sick? This is what's so sick, folks. I remember this so well because I remember right where I was when I was doing it. But the sickest part is that that's 15 and a half years. If I fast forward 15 and a half years, man, it's pretty scary.
The older you get, the faster it goes, it seems like.
Oh, it does. I mean, it must percentage-wise, right? You know, so So anyway, folks, if you want to, we just started this today. This will be in place until the 800th edition, which is next week. But if you want to, and if you are a subscriber, you can take advantage of it. If you're a new subscriber, you can take advantage of it. It's $600 for 60 weeks. You know, I think we get a good deal on gold, man. It's just going to be a patience deal, and the real question is going to be, can it break the consolidation that it's been in since November? Because
what do you think gold can step down to 12? What, 70 something?
I'm not.
Maybe?
You know, I'm actually not looking for the gold contract to actually back down that much. It's you know, yeah, we're 1280. Yeah, this can get to 1270 something. You know what I mean?
Yeah.
Nothing heavy. I just think that it's a building cause deal, in order for those equities. We have divergence in the equities. Some of these gold equities got hit pretty good, man. You know, and others didn't.
Yeah.
You know, so that in itself can twist the GDX as well as the nugget and the dust. You know, I mean, that's.
Well, the other thing that was what I didn't like was the way it was acting when the dollar was getting.
I agree.
Crushed too.
That's right.
I mean, I was like, all right, come on here now. You know, come on, something break here. You know.
And what Tim's saying, folks, is that the dollar was getting crushed. And I felt the same way as Tim, is that we didn't get enough expansion inside those gold equities. You know, they went up. You know, we did all right. You know what I mean? But that's not what you'd normally have when you get a crush in a dollar like that. You know, so.
Thanks, Tommy.
So it's patience, man. It's either patience or you go look at the dust and day trade the dust.
Yeah, right.
Yeah.
That could make a jump up to 30s too. That's a good point.
Yeah.
I mean,
yeah.
It was a quick move, so you had to be on your toes. But
No, totally. Cooking, brother.
Thanks, Tommy.
Have a great one, man. Have a safe one. Yeah, the Bitcoin deal, folks. Check this out. This is pretty amazing when you take it. Bitcoin today hit a high of 43.41. Right now, and that's a gap. It's a gap high of an extraordinary amount. You're at 42.59. Pretty intense. Let's go to our man Mike in Somerville. Hey, Mike, what's going on, brother?
Hey, Tom. How you doing, pal?
I'm doing great, man. Yourself?
I'm doing good. Look at Tommy. I got out of those the GLD, the PPLT, and all that stuff we talked about 2 months ago. And
yep.
I'm looking to get back into the PPLT again. Maybe I'm going to be patient. I'm just wondering, what are you thinking?
Let's take a look. So the PPLT, this is the ETF for the platinum shares, folks, for the platinum contract, rather. Yeah, I would have a little bit more patience. Just stay right there. We'll be right back, all right? Our phone number is 877-927-6648. And, folks, if you do want to take advantage of the Gold Report special, just started today. I got the 800th edition coming up next Monday. There's an edition out today, actually, with a buy in it. So if you test drive it if you buy it right now, 600 for 60 editions, you'll get it all. We're going to be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We're talking with Mike from Somerville, and we're talking about the PPLT, which is the ETF structure for platinum. So, let's put the platinum contract up first.
Tommy, I don't know if you remember when I called you a while back with gold and platinum. It wasn't looking too good for the metals back then, and they did pretty good for themselves.
Yeah, no, platinum had a great run, man. When you take a look at this, what you're going to see, folks, platinum on the 11th of July was $891 and runs to $996. So when you look at this, it takes out the swing with volume, takes it all out with volume, so your next run's going to be pretty cool. I would wait. Okay, so 946. Yeah, 946 would be a number, which is the third. We go back to the PPLT, and that's going to get you into about, there's a gap right there. I just take your time. You're at 92.54 right now.
Yeah.
You're pulling back with tremendously lighter volume. 90.94, we could get down to that level. And that would be a nice setup because you could put your stop. You wouldn't have to give that much. I'd put a stop under like 89.65. And then what you're looking for is you're looking for $100. You're looking for the high of February 27th. That's the way this seems to be setting up right now. Yeah. Because when you I'm sorry, what?
Well, sorry, buddy. You're not thinking gold's going too much lower, so maybe get into that one a little sooner?
On the gold, okay, so are you looking at the GLD?
Yeah.
Okay, so if you're looking at the GLD, no, I'd hang there until you're at 121. See how it hits. I suspect we're going to get down like 119.39, somewhere in there. This is light volume, but, it's having a tough time building cause to get over that November and October downdraft. You can see on the weeklies. On the weeklies, what we did is this. On the week of April of 2017, you had 55 million. The week of June, you did 39. Last week we did 37, and you're coming into 80 and 83. You can see it needs a lot more volume, man. It's not enough volume to take out that supply line. That's what you have happening. So, and we're going to kind of know on the first leg down, meaning like today is tremendously lighter volume. If it stays like that, that's great, but it doesn't necessarily have to. What I don't like is just when I was just going through that on the volume, you can see how the volume keeps dropping off as you're getting into that swing point. So that sets up that, you can pull back. So just have some patience, man.
All right, buddy. I appreciate it. My daughter Lee is dying to say hi to you. She's been standing next to me. Hurry up, real quick.
Put her on. Hi, Leah. How are you?
Good.
How old are you, Leah?
9.
9?
Yeah.
That's a beautiful thing. And when's your birthday?
It's gonna be Wednesday.
Oh, really?
Yeah.
You're a Leo. Oh, you know what a Leo is? Leo the lion-hearted and astrology? That's your sign? Your father's going to kill me.
Scorpio, Tom, by the way. Yeah.
Leo is a really strong sign. You're going to love that. That's a strong sign. Well, happy birthday.
Thank you.
And many, many more. I'm sure you guys are going to have a blast.
All right. Hey, yeah, she guessed again, Tom, on the thing. She's going to be 0 for 2 on guessing on the.
That's all right. I want to let her guess every day. It's a beautiful thing, and I'm glad you just brought it up. I know, shame on me. And we have that Facebook, folks. Today was the Nasdaq comp. So you can go over to Facebook, like us on Facebook. Each and every day we're giving a bunch of prizes out, and that's going to be for the whole month of August. Cooking, brother. Have a great one, man. Have a safe one.
Oh, thanks.
Thanks. Some of the higher volume stocks out here today, and we are going to have a lot of numbers after the close out here today, which are going to keep moving markets around. Oh, look at this. NVIDIA's up $11. That's still moving. Apple's up $2.35. You got Wells Fargo's up 95. That's a dog. Wells Fargo, man. Holy cow. AK Steel is flat. Let's go look at U.S. Steel. So U.S. Steel right now trading $23.30. And, yeah, this thing's going nowhere but downtown. So this could be a very large ABC structure on the way down, too, which is pretty wild. You get an 8-point fall. This could be an ABC down because this came off the lows in March of $8.41. The high of that is $14.54. This just doesn't look like it's going to get any traction. If we put this on a monthly, yeah. On a monthly, actually, $17 is sticking out like a sore thumb. The Walmart is coming out with numbers the 17th. So I believe that's what we're in. Was today the 15th? I think. Whoops. No, today's the 14th. Tomorrow's the 15th. Okay, so Walmart's coming out with numbers on the 17th, and if this keeps trading like this doesn't look like it's going to basically do very well. You know, Walmart's having a hard time staying over $80 and 47 cents. And who did we just have? Someone just is it Target? I think it's TG. Target just bought someone today to try to compete. Yeah, there we go. So Target looking to improve the digital business. Agreed to acquire a software company that manages local and same-day delivery. The discount chain is buying Grand Junction, a San Francisco-based startup that links retailers and other distributors to a network of more than 700 carriers across North America. Grand Junction currently handles the same-day delivery for Target stores in Manhattan's Tribeca neighborhood. You know, the amazing part, folks, is that everything that we do is going to be like hit a button and delivered to our doorstep. The logistics behind it are going to be wild watching how this whole thing shakes out, because when you actually look at the Amazon business model, they are actually in the delivery business. That's when you cut to the chase, that they're in the transportation and the delivery business. And it's like everything's game. And I suspect it's only going to be a matter of time before all middles get taken out. That you have a manufacturer, you have the delivery, bang. It goes from the manufacturer to the delivery, and then the next thing's going to be when we order it, the robots just start making the piece right then and there. This will probably be 5 or 6 years on some things. On some things, it'd be probably a lot quicker. You order it, they make it, spit it out, gets into the drone, comes out, drops on your house. That's you talk about efficiency. That's where we're going with this whole deal. It's a whole delivery product. Let's go take a look at Apple. So Apple right now, $159.89. And yeah, it's still over the highs. You know, the longer it's there, that Apple actually stays over this, the number to keep your eye on Apple is 156.65. You know, it came down on Friday, got inside that, and Thursday rather, but Friday jumped. It didn't close under its breakout area. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Don't forget, if you would like to get the gold report, I'm doing the 800th edition next Monday. We got a special going on right now. You can get 60 editions for $60. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go take a look at Diana Shipping. This is, let's see. So the low for the year is 221. The high is 620. Let's see what we got here. Yeah, I wouldn't be touching this thing. So, this went from what, 247 in 2016 up to 620, comes down hard. This bottom line looks to me, you got to test 345. You can actually come back and test 244. And that brings up DRYS, okay, DRYS. This was the biggest fraud out there. It's going to be really intriguing to see how this whole thing shakes out, folks. Because DRYS, they just kept issuing stock after stock after stock. When you look at this thing, you look at, okay, it looks like it's been trading for $3 forever. Well, guess what? If we just put this on a weekly what you're going to see, it's actually shocking that in the last, let's see, so in the last year, just the last year, this is crazy. I'm not good. I'll just go back to November. So November, it went from $129, okay, $129, and you're at $340 right now, just in November. And what that's all about, and I'm sure people get trapped in it, what it's about is that the company itself just kept reissuing shares, and every time you actually look at it, it would look like that, okay, the bottom line is that it looked like it was trading at the same price, but they kept splitting. So right now there's 25 million shares outstanding. You get, bottom line, don't touch it. You know, there was an article out today claiming that, yes, that's not going to happen anymore, and the CEO actually bought some, but what you really have there is that that's the CEO. If you actually look into that, what you have is that the CEO was paying himself through a huge amount of companies that he actually owned, and the filing actually is just more ships that he's now putting inside dry ships. You stay right there, folks. We'll be coming back with a lot of numbers for you after the close. Dow Industrials right now up 145, Nasdaq's up 89, S&P's up 25.5. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester. Hey, Marty, what's going on?
Hi, Mr. O'Brien. How are you?
I'm doing great. How you been, man?
Not bad. You know, you guys, over the time and with a few of your courses and seminars, you know, you taught me how to fish.
That's a beautiful thing, brother.
Yeah, it's true. And so what happens is I still listen all the time, and to not only you, but some of the others.
Sure.
To, you know, get an idea where the fish might be biting. As far as your services, they're a bargain. When you compare them to a certain prominent man with real estate courses at $35,000 and no contact with the lecturers afterwards at all, and you think of what you guys do for a few hundred, and you can get access and ask questions forever, you know, it's a great deal.
No, we appreciate the growling problem with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night and a great week, folks. Always do your best. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be fully alive in the moment. Letting go of the past means you can enjoy the dream that's happening right here, right now. Market-wise, let's take a look at it out here. We had the Dow Industrials close up 135, Nasdaq up 83, S&P's up 23, gold contract down $6.20 at $12.8790, silver flat, $17.07 an ounce, platinum down 16 bucks. $9.68 an ounce. Copper down a penny, $2.90 a pound. Light sweet crude down $1.35, $47.47 a barrel. Notes: 10-year note down 8 ticks, 126.17. 30-year bond off 10, 155.05. King dollar up 349 ticks, trading at 93.305. The euro is at 117, almost 118 to the U.S. dollar. The yen is at 109.5 to the U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We go up 238 in the SPY. You're at 246.50. You do 64 million shares versus your downdraft of 120. Bottom line, you finished over the 246.44. That means you can go to higher price. Anemic, but bottom line, you finished over it. So I expect more than likely you're going to try to hit the lows of the high, which is 248.91. Today we got to 246.83 rather. 246 is 248.91 is the high. 246.83 is the low of the high that was generated last week. We got to 246.79 today. Inside the NDX 100, the three Qs, same type of setup, meaning we got up dramatically lighter volume. We did 33 million versus a downdraft of 63. We are at 143.93, and that puts game that it can test the high of last week, which is 145.47. The actual high inside the NDX, folks, is 145.96. Dow Industrials. And now, what we have had happen is this. So picture. Well, let's do the Dow first. Dow is up $135. You're at 21,993. That's going to go after the lows of the high, which is the 22,057. That's only 63 points higher than we are right now. And if we go back to the S&P for a second, what you're going to see is that, well, first go back to the Qs. What you're going to see, the Qs gave us the first warning shot, big time. Well, it gave us 3 separate warning shots. Now we have 4. That was on May 17th. May 17th and 18th, cracks, go low, goes lower, go to a higher high, cracks again on the 9th of June. Takes about a month to get to a higher high. Actually, a month and a half. Gets it, cracks down again. We did another one on Thursday. Bottom line, that is a chart that's cracked. Now, that was the only chart that was cracked. That being said, now we have the S&P that has also cracked. You know, it's the same days, meaning May 17th and 18th in June. And then what you did have on Friday, though, the S&P got low enough, it got back inside its lower range, and it cracked. The Dow Industrials has not cracked. The Dow hasn't cracked. We'll see if that's the next crack. What's cracked in a big way is the Russell 2000. Russell 2000, we went up $19 today. Big expansion. You know, didn't get over the highs of last Thursday, which is 12, was 13.96. But when you do take a look at this, what you're going to see, this thing was fast and furious on the way down. You're still at December of 2016 inside the Russell 2000. Gold contract. What do we have with the gold contract? Okay, so gold out here, folks, you have a confirmed ABC structure on the way up. Gold took out its B point last Wednesday, took it out with volume. You get a price projection of 1326. Now, that being said, I suspect we're going to build a bit more cause here. The reason being is that the gold contract itself needs more cause in order to get through the downdraft from October. October, the gold contract went from 1316 to 1249 of 2016. In November, we went from 1338 to 1218. That level there we've been trying to get through since November. When you take a look at the amount of contracts as we get up to 1294, bottom line, we need more contract volume, we need more cause, because I expect what you're going to see is that we're not only going to finish the ABC structure on the way up, this contract looks to me like it wants to go to the 1377 area. And if you do have an interest inside the metals market, folks, I did the 799th gold report today. We actually do have a buy in there. We're doing a special for the 800th gold report, which is next Monday. You can get 60 editions for $600. That's $10 an edition. Bottom line, you're saving 50%. If you're a subscriber right now, you can take advantage of it. You want to be a new subscriber, you can take advantage of it. That special is on from today until next week. So check it out, the front page website at TFNN. Silver, let's go take a look at the silver market. What you have with silver is this. Silver hanging tough up here. We've done 72,000 contracts today, which is great contract volume. Last time, it's pushing 100. It did 100 on Thursday. It did 94 Friday. Today it did 70. That's a good situation. Bottom line, silver also looks like to me like it wants to go to the 1780 area, and we'll see whether that can make it up to the 1878 area, because it looks to me like 1878 is game. Now, the problem inside the metals right now, let's go over to the dollar, because the dollar still looks like you're going to get a dead cat bounce going. Dollar went up today, light volume. You did 13,000 contracts. If this wasn't a dead cat bounce, the dollar would be doing about 30,000, folks. So I expect we're still going to see the dollar at 95 or 96. That's going to be the B to a C of a much larger ABC structure down that takes the dollar into the 88 area. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 135. NASDAQ up 83. S&P's up 23. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go take a look at inside the Dow Industrials, the strength versus the weakness out here today. Strength inside the Dow Industrials. You had Goldman Sachs putting 21 positive points into it, Apple putting 16, Boeing putting 15. You only had 4 stocks that were in the negative. Home Depot was down, putting 4 negative points. Disney was putting 4. Chevron was putting 3. Now let's go over and take a look at that XLE. So the XLE, folks, is going after its swing low. This is serious business. So the XLE has been down for 6 months. Oil itself basically went up. What is happening here is that it looks that the equities, Exxon and Chevron, are basically leading this baby down once again. So it's going to be intriguing watching the contract itself, because the XLE very well could be a very large ABC structure on the way down. And if that's what it is, get out of the way, because your A point on this is $78. That was established December of 2016. Your B point is 63. So you're talking 15 bucks. Your C point is 67, which is going to give you a 52. And what we do have is that we do have a high volume swing low at 49. So that's where it looks like it's going. That high volume swing line low is from January of 2016. We look at Chevron, which is the second largest weighting. Now, Chevron is what saved the XLE last week from basically blowing out that bottom. Chevron, 2 weeks ago came out with numbers. Chevron goes from 104 bucks all the way up to 111. It's starting to back down. It's light volume, but it looks like it wants to back down into the 106. ExxonMobil, different animal. ExxonMobil is a mess. ExxonMobil broke out its bottom. You're flat out here today, but if we take a look at this on a weekly, what you're going to see is that you broke the consolidation that it had been in since February of 2017. And, this looks like, let me pull this. Yeah, this is trouble. This is on its way down to $75.98. If you break that, Exxon does have a high volume low at $66.55. So it's like, okay, if we go over to the oil contract now, because it was the equities that basically have been saying for quite some time that oil is also going to continue lower. We take a look at this oil contract. Let me put this on a continuous contract. We just might have very inexpensive oil for quite a while here. That's what it's looking like. So, yeah, if this is the dead cat bounce, this is pretty anemic. That it only could have got to 50 bucks, $50.43. So you first, we're at 47.49. We're game to 45 to 42. And if in fact this is, wow, yeah, but we're game down to the lower end. The lower end of this actually consolidation that goes back to 08 happens to be like the $34 mark, so that's pretty intense. So that's the XLE. If we go over to the financials, Goldman Sachs at one point was the leader inside the Dow today. Goldman was trading 229. You're trading 227 right now, and bottom line is that this can't get out of its way either. It can't handle the $250.70. Each and every time it gets up there, it gives it up. Let's go to Bank of America and take a look at Bank of America. Same type of setup. Bank of America can't handle it. Wells Fargo, we know is a dog. Wells Fargo, they get that's trading 52.84. That's one of the weakest financials out there. Let's go to the Berkshire Hathaway. So Berkshire Hathaway is still the largest weighting structure inside the XLF. And Berkshire failed to hold the high of 177.86 last week. Right now you're at 177.29. We'll see where that, but so both of those ETF structures, XLE, XLF, they both look that they want lower price. NVDA, okay, so different animal here, NVIDIA. NVIDIA, what does the NVIDIA do? Goes up $12.44. Let's go to the SMHs, because it was the chips that brought the NASDAQ up that dragged everything else up also. The semiconductor index, that was up $1.68 today, $86.85. And this baby's going after its last high, which is the 88.35. You know, this came down fast and furious on the 9th of June. That's I don't think it's going to make that high again, which is 89.71 to 84. That being said, though, LRCX, there was big strength, and that was the strength inside the NDX 100 today out here. You get Lamb Research. This looks like it's just a dead cat, but the bottom line is that it wants higher price. This could get up to 161. Right now, you're at 158. Some of the higher volume stocks out here in the market today, and we had a low. Well, actually, let's go look at the exact. We had 744 million, which is low in NYSE, which makes sense, by the way. And we had 1.6 billion inside the Nasdaq Composite. You know, so what you have is this: you get the bounce going. You are on lighter volume, still deep in summer trade. Monday, Friday, you can expect that light volume. And we'll see whether it's setting up that ABC structure on the way up. What we are going to have is that we're going to have a lot of these 13Fs coming out right now. We go over to Barrick Gold. Let's go take a look at this. This is going to shake some, rattle, roll some stuff around here. So all these 13, what a 13F, folks, is this. 13F is that the hedge, no, not just hedge funds, any type of fund that is going in and out of positions have to disclose those positions within 45 days of the end of the quarter. And that's what the 13F is all about. So let's see what the good old Stan Druckenmiller is doing. Billionaire investor Stan Druckenmiller sold all his stake in Barrick Gold last quarter before shares rebounded as the company reported better than expected earnings. At the end of June, he no longer owned any shares in Barrick, according to regulatory filing. That compares with 2.8 million shares as of March 31st. So let's go look at Barrick. Because this is a guy that is a trader, folks, okay? But it's always cool understanding where he's getting in, where he's getting out. And you don't know it exactly, okay? What you do know is that, let me see what that says. Well, was it the end of June or July? One second. At the end of June, July. Oh, I see. Yeah, today's August 15th. That's 45 days. Okay. So we got to go to the end of June and see where this baby was. So June 30th, yeah, he could have, well, he bought it in March. Oh, yeah, he got caught in the downdraft. Okay, so he just got out. Yeah, he would have got hurt on this one because Barrick Gold came down hard on the 25th, you know. We'll see whether he... Yeah, he would have got hurt in that. So PHDC. We come back. We're going to go through a bunch of these and see who the buyer and sellers are. So latest disclosures. There we go. 331. Caxton Associates. They sold 11 million. Arrow. No. Hold on, June. There we go. Oh, Fidelity. Fidelity's trying to get out. 7.5 million. You stay right there, folks. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And folks, as you come over to our website at TFNN, you're going to see right in the top of the carousel, the 800th issue of the Gold Report is going to be out next Monday. We're doing a special, and what the special is that you can do 60 weeks for $600. That's $10 a week. I did the 799th edition out here today, and we go take a look at this. If you want to see something that's wild, it's pretty wild. You know, when I started this, gold had been in a 20-year bear market, and you know what's so neat about doing the show. I remember in 1980 when gold did take off. And so doing the show has always been neat because what ends up happening is that people are always calling. So we were keeping an eye on gold in a big way. And what ended up happening, bottom line, gold bottomed out at $252. That was in 99, went sideways, and bottom line, we caught it at $282.50. And, you know, the first, it was pretty wild. And if you want to take a look at the correlation was pretty sick because the correlation inside the dollar, that's when the dollar, folks, was trading 121. Let me pull this back a bit. What you're going to see on a continuous contract, the dollar hit, in 2000, the dollar hit 119. And 2001, it was 121. And bottom line is that when I actually started it, which was right around, it's 15 and a half, so it's 2002, the dollar was at 120.80. And the dollar, folks, went straight down. I mean, that's why gold went straight up. The dollar took a hit from 2002. By 2004, the dollar was at 80. That was vicious. And bottom line, what's going to be intriguing now to see, so here, let's do this. If you look at the whole correlation, actually from highs to lows, the dollar index, okay, so we went from 121 in 2002 down to 73 in 2008. We got over the 0.618 retracement. We got to 103.81. Now, so what that means is this. This is pretty cool. So on a long-term basis, when you do more than a 50% bounce, that's saying that it's actually strong. So when you look at a long-term, that's saying the dollar is strong. That being said, as the dollar is pulling back, what you have is that, and that also would be saying that you're not going to go break the 70. That's all it says. It doesn't say that we won't get into the 88. Let me do this. I'm going to bring this closer so I want to see what kind of retracement that would be. Okay, so there's 88. So if we take a look at where we come from, this would be pretty cool. Okay, that's not bad. That would be saying, let me make sure I got this right now. If I do this way, what I'm trying to do right now, what I'm calculating, folks, is that what would be, yeah, the last retrace. Oh, look at that. That's pretty cool. Okay, so check this out. So the 88 is also a 50% retracement off the last low that was made on a long-term basis. So you know what? More than likely, we're going to go there. But you know what that also says, folks? Yeah, we're going to be really careful at that 88 if that's where it's going. Interesting. But that's how that's kind of set up. So if you do want to take advantage of the gold report, folks, come over to our website at TFNN. You can, it'll be 60 weeks for $600. Now, let's go take a look at some of these because this gets really interesting. So we're going to go over and look at Gold Corp. Now, because the 13F filings are out here, what you do have is this. So when I started the gold report, the only institution, folks, that owned any gold stocks, the only institution was Fidelity. Fidelity had owned 14.2% of Gold Corp. And it was really wild because I've always used these 13F filings to look at, on a much larger basis, what big funds are going in or going out. So you can imagine when you only had Fidelity owning one equity, that was pretty cool, because what you don't know is this. All the filings are 45 days late. So what you don't know is the aspect of if they went in or they went out, have they changed since that position, which they can do. The cool thing about what happened in the gold market was all I had to see is as more institutions are coming in, it's like, okay, you start getting acclimated to how they like to trade, when they're going in, how far will they go in. Now, Fidelity, okay, this is really, really cool because I just pulled Gold Corp up because they've always liked Fidelity, but they trade it. You know, the ironic part about Fidelity, they're always claimed that they're long-term holders. Those funds, folks, are one of the biggest traders out there. And in fact, I remember when they first started their active trading, they were always making like, no, you want to invest. The bottom line is that they're some of the biggest active traders out there. That being said, so watch this. I want to show you something because Gold Corp had been getting killed. Well, Fidelity was the largest seller of Gold Corp, or the second largest seller, but the largest seller in the context of actually a fund, because Van Eck was the largest seller as of June 30th, 15.9 million. The Van Eck, however, folks, is an ETF. That's what's going on inside there. So they still own 42.3 million. Fidelity had sold 13 million as of the 30th, and they had only had 4.4 million left. So I expect more than likely what you're going to see is that they probably were out, and they might already be buying back in yet. Okay, so let's go down this a little bit. So when you're looking at it, you can see that as of June 30th, 13 million, that was the big seller. You had Alps Advisors, they sold 1.3 million, they don't have anything left. Investec sold 1.3 million, they don't have anything left. Bank of Montreal sold 1.2, they have 13.6 million left. Now watch this, that's the sells. We go into the buys, what you're going to see, this was a complete turnover. The buys, you get some decent buys. You get someone that's just came in, Majest Die, they bought 5.8 million, now they get 8.1. Canadian Imperial, that's a big player inside the gold market, folks. That's a big bank. They came in with 4 million, now they get 19 million. Morgan Stanley came in at 3.7, they doubled up their position, now they get 6.2. Sun Valley is someone you're always going to watch. He knows the gold market upside down. He came in with 2 million, he has 2.6 right now. Deutsche Bank came in 1.9 million, they're up to 8.4. Bottom line, we'll see where this shakes out. I really like the idea, though, that Fidelity, okay, so if we go back to June 30th, there it is right there. June 30th, it was $12.81. That whole downdraft, that type of selling, a lot of that was Fidelity. You know, you don't know exactly who else was in there. It's a big heads up, because what you're going to see if you are in this market, if you're in the what the gold equities have done is this. We bring this back. They've come back to the January and February strength. And it's took a long time, but they're back in that area with dramatically lighter volume. And I know many of you were in that run topside, including myself, and that was a heck of a run. And when you take a look at it, he took off with 65 million in February of 16, and we just pulled back with 37 million. That's the kind of pullback you want to see. Stay right there, folks. We're coming right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil Chapman will be giving a 2-series webinar Wednesday, August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. 877-927-6648. Let's go take a look at the TLT. So the TLT, folks, is the 20-year bond, 20-year plus bond ETF structure. This another, bottom line, bond deal. And what we have is this. So the TLT, the last high in the TLT is June 26th, 128.57. And we always talk, I go over the 10-year note, the 30-year bond. Bottom line is that if you don't have the futures, this is also a good vehicle to look at. So when we put this on a weekly basis, what you're going to see is that we've been at this level since November. November, huge downdraft. The whole world thought the interest rate structure was going to go to the moon. Bottom line, the TLT went from 131 to 121. End up bottoming out in December 16th at 116. You're back to 125. Now, same as gold, this is what it's trying to get through, meaning the November. Gold is actually trying to get through October and November. That being said, what you're going to see is that this baby is building cause to get up into the 128.57. You know, we'll see whether it can take it out. When you take this back and we put this back on a much larger basis, just as you do the actual notes and bonds, what you're going to see is that the TLT, this is really gets really wild because, see, the last time that the bond market took out a swing low was in 2000. That's how powerful the bond market's been. The TLT has never taken out a swing low, folks. This is about as bizarre as you can get. Let me just see. Maybe it did in 2007, 82.20. Yeah, okay, it did. It did. So in 2007, watch this. It got down to 82.20. It didn't stay there. It was taken out 82.56. And it never looked back from that point. Bottom line, notes, bonds, they want higher price. If we go over to the Fed Fund futures rate, what you're going to see is that last week, March 21st, that's a Fed meeting, that was over 54%. Now, that's 49.9. That crawled up a bit today. The first time that we're over 50% probability that short-term rates will go up is June of 2018. It's pretty amazing. And that, okay, is with, today you had Dudley coming out. Let me see if I can find this. Dudley came out, well, he came out saying Cohen would be a reasonable candidate for the Fed chairman too today, but he also came out saying that he thought that, here, I'll do it this way, that it still should be game to raise short-term rates in 2017. Let me see if I can find this. Okay, so let's see. Treasuries lower across the curve as hawkish comments. Here it is. Yeah, by the Fed's Dudley late in the day saw yields end near session highs. Risk appetite had returned. Let's see. Yeah, the bottom line, it's not in here, but what did happen is that, oh, here it is, okay. Okay, late afternoon downside move sparked by comments from Dudley, who said he'd back another 2017 rate hike if the economy supports it, and that market expectations for September balance sheet announcements are not unreasonable. The bottom line on the, so you have the Fed balance sheet, folks, that's trillions of dollars. They are going to run that off. That being said, the runoff is going to be very slight for the first year. When in fact they start this, when they started, I believe the number is going to be $10 billion a month. After a year, it's going to run up to $50 billion. Bottom line, that's nothing in the context of the bond market in general. And what the runoff specifically means is this: is that right now the way that the Fed works is that as the bonds expire, they are using that money to buy more notes and bonds. The runoff will mean that it's not they're going to sell them. It's going to be they expire, they get the money for them, and they're not going to invest that money again inside the bond market. And as I said a few different times, what you're going to understand is that the Federal Reserve itself, well, the Treasury come out, folks, and they tell the market how much they're going to finance every 3 months. So the market already knows how many 2-year, 5-year, 10-year notes are going to be in the marketplace. What has happened is that there's more cash going after those than there are actual bonds or notes in the marketplace. On top of that, what you have is that because of the aspect that this market has gone so high, is that the amount of taxes that are due is pretty amazing. Here, so let's watch this, just so you can really wrap your head around this, because this is really unusual that you can actually put this together. Because if we take the S&P and I'm going to bring this back just 2 years. The reason I'm going to bring it back 2 years is this, is that when we take a look at 2 years, normally what would happen is that for tax reasons, so 2 years ago we were at 1810. You're at 2465. Normally what would happen is this, is that as you finish the end of the year, people take profits, you're going to pay taxes on the profits. Now what happened this year, because of the new administration, bottom line, they're saying they're going to get tax reform done. There's many folks that didn't take profits in the aspect of 2016, but yet more than likely took them right at 2017. What does that mean? That means the taxes, it doesn't look to me like we're going to have any no tax bill before December 31st. The amount of taxes that are going to be due here are going to be huge, folks. And that's whether they sold then or they're selling now. So what that does is this. What that does, that's going to put huge amounts of money inside the Treasury. And what does that mean? That means that there's going to be actually less bonds on the refinance of the bonds that are out there. And that's why when we look at the actual rates, the rate, it's one of the reasons when we look at the rates are staying so low. Right now, the 10-year is at 2.2. You know, 2.2. The low for the last 6 months is 2.1. The high is 2.3. We bring this back and we take a look at the lows for the year. Low for the year is 1.5. Yeah, 1.5 and 2.6. We're right in the middle of that for one full year right now. You know, so bottom line, don't expect these rates to go higher. Expect my take is that we're actually going to go under 2% once again, because when we look at the world rates, you know, you still get France at 0.6%, Germany's at 0.4, Italy's at 2%, you get Spain at 1.4%. We get high rates, folks, and high rates, lots of cash. And what does that mean? That means bottom line is that these rates are going to stay low. The twist on the dollar is going to be interesting. Is that what, you know, is looking to push the dollar down to 88? That's a wild card out there. You go to look at the Canadian dollar. Bottom line, Canadian dollar is getting stronger. You know, Canadian dollar right now is trading 127. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials finished up 135. NASDAQ up 83. S&P's up 25. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, if you would like to take advantage of the special that we're doing in the Gold Report right now, I'm doing the 800th edition next week. We have a special that's going on. It is half price. You can get 60 weeks for $600. You can check it out on the front page of TFNN. If you do it right now, you'll get today's edition, as well as you just start kicking it off. If you are a subscriber, you can take advantage of it. If you're a new subscriber, you can also take advantage of it. Now, that being said, let's go see inside the GLD these 13F filings. That's always intriguing. When gold's either going up or down. So first I want to see the sellers. Okay, so the sellers inside there, you had UBS sell 6 million shares. Morgan sold 2 million. They cut their position in half. This is as of the 30th of June. Orbis did 1.3. They cut theirs in half. Schroeder, 1 million. They cut theirs in half. And Goldman did 1 million. That was the sellers. The buyers, Bank of America added 1.7 million. They own 7 million shares now. BlackRock, 1.6. Or the BlackRock will be an ETF, so you don't pay attention to that. Fidelity, oh, there we go. Interesting. Now, Fidelity sold Gold Corp. I'm glad they did, because now we don't have to worry about them selling it. But they bought the GLD. They added 1.5 million. They're at 4.7 million right now. You had, let's see, Bridgewater. Oh, that's interesting. So Bridgewater Associates, that's Ray Dalio. That's a new position for him. He put in, oh, you know what's interesting about that, too? He actually came out. Now, this is always intriguing, folks, because what happens is that many of these folks, they talk their book, meaning when they're buying, they're really selling, and when they're selling, they're really buying. But Ray Dalio actually came in and bought. And he was out there last week, you know, saying that the folks should put 5% of their portfolio inside gold, and he bought 577,000 shares. Interesting. Pretty wild. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look for the speaker right back here tomorrow, 9 o'clock. Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.